Analysis. Swiss policy pivot indicators exit for huge stock and bond investor London from Silicon Valley shares to US and European authorities bonds. Securities that are already below heavy pressure stand to lose a chief consumer as Switzerland ends its long-standing policy of recycling euros and bucks into foreign markets. The Swiss National Bank lately delivered a Marvel half-point hobby fee hike and for the first time in years neglected references in its declaration to the franc being surprisingly valued. The shift is a momentous one, suggesting the SNB will no longer prioritize weakening the foreign money with the aid of shopping foreign exchange, a coverage that enabled it to construct a reserve pile of nearly $1 trillion. Unlike most important banks, it recycled these proceeds of intervention into world markets in preference to holding them at home, making it a big inventory and bond investor. In current years it ranked a few of the top shareholders within the likes of Apple, Amazon, Nasdaq, AMZN, and Microsoft, Nasdaq, MSFT. Any discount in its purchases, or an eventual flow in the direction of promoting a possibility after the financial institution stated it is also ready to check a weakening of the franc dangers heightening volatility on already shaky markets. The SNB's departure from its previous method to keep the franc susceptible way they'll unwind their large U.S. stock holdings, mainly in FANGs, which have to increase selling pressure on those megacap names, said Kaspar Hentz, senior portfolio supervisor at Bluebay Asset Management, relating to the tech quintet of Facebook, Nasdaq, Meta, Apple, Amazon, Netflix, Nasdaq, NFLX, and Google, Nasdaq, Google. The SNB had already reduced back foreign exchange shopping for in latest weeks, as evidenced by using a drop in overall sight deposits at Swiss banks, which are visible as a proxy for intervention. These deposits declined by means of 1.3 billion Swiss francs within the week ending June 17, versus a rise of 756 million francs a month earlier and a boom of nearly 6 billion francs in early April. The SNB mentioned it are looking for to minimize the marketplace effect whether or not it were to allow existing bonds expire or actively promote belongings, with the point of interest ultimate on the general liquidity of the portfolio. With inflation above the SNB's goal, the franc has been allowed to rise to 7-year highs against the euro, in short pushing past 1 franc in step with euro in March. It has completed less properly towards the dollar, which has soared on expectancies of competitive policy tightening with the aid of the U.S. Federal Reserve. FANGs. The SNB's latest coverage shift isn't always pretty, on a par with its shock choice in 2015 to ditch the francs-euro trade fee peg. But tighter policy and its capability step back from markets coincides with a deepening market sell-off that has dispatched international shares to a 21% loss this year. Bond yields have also surged as inflation hits multi-decade highs, prompting steep charge hikes. In isolation, the impact of capability asset sales were constrained, however it comes in the center of a sharp repricing and decreased marketplace liquidity, so the effect will in all likelihood be magnified, stated ING senior prices strategist Antoine Bouvet. It is hard to gauge correctly the effect of any funding pullback, as the SNB does not provide a breakdown of precisely which belongings it holds in every currency. SNB data does show that 1/4 of its FX reserves were in equities as of end March. At that point, U.S. regulatory filings show the SNB's U.S. equity portfolio turned into worth $177 billion, including $12.4 billion in Apple shares, Nasdaq, AAPL, $9.5 billion in Microsoft, and $6.4 billion in Amazon. Other holdings covered $1.5 billion in ExxonMobil, NYSE, XOM, and $1.1 billion in Coca-Cola. The SNB additionally holds 600 billion francs in foreign authorities bonds, making up 64% of FX reserves, in step with calculations from SNB information. Assuming bonds make up the same proportion of holdings in every forex as they do across its entire FX portfolio, calculations show that might include a few $248 billion of U.S. Treasuries and €221 billion of euro area government debt, most of it probable to be in top-rated bonds like Germany's. Their activities had been pretty big over the previous few years, and we did see in trendy improved euro holdings by means of vital banks, and the SNB is certainly one of them, BOFA strategist Sfia Salim stated. She expected stress on short-dated German bonds. Unsurprisingly, remaining week's coverage pivot sent euro region and U.S. bond yields surging. If the SNB have been to wind down bond holdings, it might first forestall reinvesting the proceeds of maturing bonds, Lynn Graham Taylor, senior rates strategist at Rabobank said.